Yesterday, the vote count concluded in Arizona, the last of the 7 key states in the United States. In all of them, Donald Trump was declared the winner. According to the final results, he gained 312 electoral votes, while his opponent Kamala Harris received 226. There is now little doubt that America and indeed the world must brace for a reset in economic priorities. Incidentally, some companies in the US are already offering a 4-year world cruise for those unhappy with Trump's victory, named Skip Forward. It includes visits to 240 countries across all 7 continents and offers passengers a flexible opportunity to escape politics and the monotony of the city life. Apparently, some will want to fast forward through this for years, but the length of the cruise itself, along with its name, reflects the scope and scale of the serious changes that American society expects from the new president. These expectations have fueled a 6-week rally of the US dollar index. On a Monday, it rose to 105.50 points, the highest level since early July this year. While Trump trading does not impact currencies as heavily as before, it still remains in trend. Besides, in his press conference, Fed Reserve Chairman Jerome Powell announced directly oppose any rate cuts in December. It means that the US Fed will maintain a more hawkish stance through the end of 2024 compared to other major central banks. The main reference here is, of course, to the European Central Bank, even though it currently leads in the pace of rate cuts. ECB policymakers have been clear about the need for further rate cuts. Goldman Sachs, for instance, believes that such actions by the European Central Bank could potentially depreciate the euro by as much as 3%. No wonder the single European currency quickly lost all its gains and is once again actively losing ground. The bearish trend is set to continue. The euro has already hit a 6-month low against the greenback, hovering around 1.0650. Partly this is due to Donald Trump's stance on imposing lofty import tariffs, which could negatively impact the Eurozone's economy. However, today, amid an empty economic calendar and Veterans Day in the United States, volatility in the euro-dollar pair is low. The instrument is now trading between 1.2660 and 1.2731. The euro remains under selling pressure as internal issues add to external ones. For instance, the collapse of Germany's 3-party coalition, with the German economy in less than ideal shape. In fact, the country only narrowly avoided a technical recession. As shown in the release on October 30th, Germany's GDP growth in the third quarter was just 0.2%, and this figure has been declining for half a year, with the previous level adjusted down to -0.3%, so the euro and Germany are both walking a difficult tightrope. The euro is expected to follow a bearish correction and also risk sliding further down, potentially toward parity with the US dollar. The euro-dollar pair often serves as a barometer of the Eurozone's economic conditions relative to the United States. Thus, the euro's forex rate directly depends on economic statistics. For instance, reports on economic sentiment in Germany and the Eurozone will be released on November 12. The index for the Eurozone rose to 20.1 in October. Analysts expect it to increase further in November to 20.5 points. However, a similar indicator for Germany's economy, published in parallel, is expected to decline from 13.1 to 12.8 points. So, even if the euro gained some bullish momentum from the Eurozone data, it could quickly fade, and this will likely result in a wave of volatility for the euro's forex rate. While forex traders are largely holding back, demand for cryptocurrencies is beyond. Bitcoin and altcoin buyers anticipate that the arrival of the new US president will bring positives for the crypto market. They foresee a flourishing era as the US is set to become the world's crypto capital, a term coined by Donald Trump himself. As a result, Bitcoin has already notched a new all-time high and is extending its stunning rally. In fact, the bullish trend in the crypto market is only just beginning. While prices in the crypto market are soaring, crude oil has been struggling to find direction for an entire week. As a result, Brent crude, for instance, is trading within a wide range between $74 and $76 per barrel. Although it dipped slightly below $74 on Friday, nothing has fundamentally changed. Considering today's US holiday, the oil market is seen. In such cases, oil prices tend to consolidate around the current levels. Besides, this pause might help calm traders somewhat. However, the market will click into JEROME soon, and this time heading toward $76 per barrel. The Russian currency is trading steadily today. Moreover, the amplitude on the trading chart decreased. This sluggish activity is occurring due to a decline in Russia's international reserves. However, the reduction was minimal from $634 billion to $631 billion, defying a forecast of $640 billion. Additionally, statistics on the car sales in Russia recorded a strong increase, reaching a massive 51%, and these figures have clearly boosted investor optimism. This focus on macroeconomic data is largely due to a temporary lull in the political factors which are of a major importance for the ruble. Therefore, investors need to keep an eye on the news to understand the situation better. So that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you online soon.